Yeah. Okay. So now let's talk technicals that help you clear up issues by being
Yeah,
right in the
yeah.
market. So, uh, why value line are you starting with it? Because we're threatening this breakout into new high
Um,
ground.
I always start with the broader indices because our
Okay.
models, basically, we run on models, quantitative models, and our models basically try to decipher which way the broad market is moving. 70 some percent of the reason that a particular stock moves up or down is because the broad market is moving that way. So we try to just figure out which way the market is moving and stay on the right side of that. So the value
Yeah.
line arithmetic average, I know people have been talking about breadth uh, challenges, breadth warnings. Overall, breadth has been good enough. The internals have been good enough to keep our models positive, bullish since basically late April, early May. And the value line arithmetic would be one example of a broader market. So this average measures the quote unquote average stock in the market. So we have not made new highs yet, which is a bit of a concern, but we are challenging those highs from last winter. So we
You think
are.
we're going to get a shallow type of correction here, Dana? I mean,
I
the action in AI in NVIDIA doesn't looks like a top short term, like it could pull back to 150 prior highs before this melt up that we've had, and would be a great buying opportunity. Are you hoping for a sell off so you could add and build positions?
I think that's exactly probably the most likely scenario. Uh, I would say one because of some technical resistance here. You look at the semiconductor, the SOX
Well,
index. We're
that
seeing a
value
stable.
line, that value line had a three drive to a top formation working right there. Do you
Yep,
see the
yep,
you,
for
you see
sure.
the three?
Yep.
Okay,
And here's
and
the
there's
semiconductor,
socks.
the SOX index doing the
Yeah,
same thing,
yeah,
testing the highs from last summer, basically
yeah.
doing the same thing. And if you tie in another part of our main risk model has to do with money flows and smart versus dumb money flows. And we're seeing basically the opposite of what we saw at the April lows. We saw extreme bearishness on the part of dumb money, and the smart money was very bullish. Now we've got basically a 180 in that in those conditions. So we have some sentiment that's a little bit over offsides right now. A
Okay.
little bit of churn or pullback would reset that enough to refuel for a breakout in that next up leg. So and you combine that also, obviously, with seasonality. We're in the most difficult seasonal period of the year, generally speaking, from August to October, and all these things would play into maybe a pause, maybe a pullback, but we don't see enough warning signs to get us off the idea that we're still in a bull market and we're probably
Right.
going to break out and put in another up leg eventually here.
Do you have any upside targets? I know you, and I wanted to just warn you that in this Epstein era, to talk about that you run with models,
Yeah,
that you
well,
need to
they're
be a
all
little,
amazing. We've been
huh?
running these models for about 4 decades, five
All right,
decades.
all right, but you know what I mean. You're
They're
not
plenty
running.
legal.
You're
Yeah.
running around Chicago with a bunch of models so that you can be right in the S&Ps.
Well, yeah, my models are not sexy at all for sure, but
Anyway, Dana,
they're
so
effective for sure.
any,
I don't. Yeah.
go ahead, go ahead.
No, I don't. We try not to. Sorry for all these pop. We try not to establish any real targets. We're gonna go with what our models are
Right,
saying and what the
that's what I
market is
thought.
doing, what the actual data is doing. If we do hit some sort of key Fibonacci extension levels, we'll take some profits. Like you look at the S&P, we hit that 127 extension and pulling back from it. Same thing
Okay,
with the Nasdaq 100. So a lot of these
yeah,
large cap growth areas, same deal. We hit some extensions to the upside. pulling back a little bit from there.
You
And
want to see something interesting, and it doesn't speak to now, but it could end up depending upon the the length of the market. If you just put an RSI over that weekly Nasdaq chart,
yeah,
on and S&Ps, even
yeah,
with this huge rally, we're not
yeah,
confirming. We have weekly divergences in all of this stuff for the
got
first time. First time.
you.
All right.
Yeah,
Uh,
and we've talked in the past about this a lot. In the long term, we have major concerns that what we call background indicators, the long-term indicators of valuation of
yeah,
household investment and price versus long-term trend. Everything is basically is extended as excessive as it's ever been in basically the history of U.S. markets. So that's not a timing indicator, but it is a
not at
degree.
all.
It's a measurement of the degree of risk in the market. So when it does turn south, there's never been really more risk laden in the market and more of an unwind that has to occur. We don't think
Okay.
we're there yet. We think we
Okay.
um, in the short term we think there's risk of some churn or pullback. In the intermediate term, we think we do make new highs. We put another up leg. But to your
I just have a vibe that we're okay until the first quarter of next year, and that we sell off into the midterms if we're even going to be allowed to have them.
Yeah, well, the breath. Here's the AD line still hitting new
Yeah,
highs.
that's positive. Yeah,
So yeah, the near term market internals are not flashing enough warning signs to get us
right.
too concerned yet. The short
Well,
term stuff is a little concerning for speaking from sentiment, speaking from seasonality, and also some short term exhaustion points. So again, I think we churn for in the short term, intermediate term, I think we do make those new highs like you
yeah,
suggested. Long term,
yeah.
we've got major problems in this in these markets.
All right. What sectors are you looking for leadership outside the indexes? I
Yeah,
know you do. You were going to Ethereum, were you? Oh, Bitcoin.
well, I was going to go wherever.
All
um,
right.
I think one interesting thing, maybe it speaks to the Fed, is uh, some of these income
Uh,
proxies. You
is
have
it,
something boring like um,
utilities? Yeah.
utilities. Let me get I got a couple other ones on here.
Uh,
But utilities have been doing well. It's not an exciting sector like semiconductors, but utilities have been doing
What's the
well.
difference? It's a nice looking chart. It's
Yeah,
not like it's boring.
no,
So
FXU boring again, like our models. If they're making us money, we
yeah.
like
So
something like a lot of the dividend plays. Now here's a technology dividend fund that we've been in, TDIV.
yeah.
A nice rally, nice consolidation, but holding up well. A lot of these income plays,
Yeah, because of rates.
income
Because
proxies
people want to
have been
lock
doing
in
well.
yields now, right, bro?
What's that?
People want to lock in yields right now.
Yeah, but
So
or we're about to start a rate cut
yeah,
cycle. So
that's
they're
yeah.
looking for, competitive
They
yields like that. Even a small, I don't have
a lot of people got used to making 5% in the bank, and they see that starting to go away, and they have to go out in duration or buy interest sensitive stocks like REITs and utilities and uh I don't think this is a
absolutely.
big. Do you like TLT long term?
I don't.
Because I don't
No,
either.
here. Well, just real quick. Here's another small cap. Some of the small caps have been struggling. The small cap dividend fund has been doing better. So a lot of the income stuff, um, it has been doing well. So I do think maybe that plays to the rate cut starting, next month. Yields. I think we've discussed this in the past too. I think the long 60-year
Yeah, that's turn.
cycle of interest rates. I think obviously bottomed at COVID. I think we're
Yeah.
going up for several decades, probably going back to the teens. Um, Short term, it's hard to make much out of, the last couple of years. We're just moving sideways. I won't be surprised to see some sort of retracement in yields, maybe a bounce in TLT in the intermediate term, but long term, again, I think the yields have bottomed. I think they go up for decades to come. Again, not in a straight line, but if the last hundreds of years of interest rate cycles mean anything, I think we've bottomed for a couple decades.
All right. Yeah, yeah. A major takeaway from talking to a pro like Dana is, as you could tell, Dana could be a discretionary trader. He has all the technical knowledge to just do it. Yet he solved any kind of mental thing of having to make a decision by having his models and being disciplined and sticking to them. So, if you have, it's not easy to be a discretionary trader because you always have to be on. Okay. And, it's nice to have something, a tool, a model that's giving you a message that doesn't have to be always come from you internally from what you're seeing on the chart. So,
That's right.
here, yeah,
And what I would say the most comforting thing about having objective quantitative models is that it tells you when you're wrong, because you hate to admit that you're wrong. But when you have
right,
something black and white staring at you
yeah,
and
yeah.
screaming in your face that you're
Sounds
wrong.
like you. Sounds like you've been there.
Yep. 100.
Okay,
Hey, we have these quantitative tools, but still human nature affects everyone, and we need
yeah,
to fight it every day, and these tools certainly help. I think internationals uh,
okay.
are also going to be leaders for a while after being laggards for really the last
Years.
decades, right?
Yeah, yeah, long time.
So in a couple, if you can look at it in various metrics, either here's the EFA, EFA hitting new highs, and the currency hedged EFA also hitting new highs. So it's not a currency play right now. It's I think a
Interesting.
pure equity play. I think the international markets are really poised to lead going forward. So we've been
Anything in emerging markets you like?
I do like one. I like emerging markets and emerging market, but the bonds have been good, at least um,
Yeah,
coming off of the lows, hit new highs, much better than obviously
hard.
the domestic bonds.
Right.
Um,
That's
yeah,
a huge move.
what's that?
Huge move
Yeah,
in
it's
comparison.
been a great move and nice and steady. A lot of these international markets have been nice and steady.
India is a favorite for a lot of people.
India, I don't love right now.
Okay.
It's hitting lower highs. I like stuff that's hitting higher highs. Like a lot of the European countries have been hitting higher highs.
DAX.
Um, Germany, the UK,
Yeah. Okay.
Austria, Italy, Spain, all we go across the board. And we've talked about Japan a lot.
Yeah.
I
You
think
still long?
uh, we are long right now. We mentioned, we talked about it. I think last
Last time.
summer,
Yeah.
if you look at the Nikkei, finally caught up to the 1990 highs. So
Yeah.
it consolidated for the last year or so. Recently broke out. I wouldn't be surprised to see it consolidate some more before a sustainable breakup. But there's EWJ. It did consolidate kind of a cup and handle here, right? Going back to the
Yeah.
2021 highs, broke out. I especially like the small caps in Japan had a real nice breakout to new highs here. A bit extended. A lot of these, even the international markets, are a bit extended right now. So, like the U.S. markets, pertaining to the seasonality, might need some digestion, some consolidation, but I think they're really poised for further upside.
Do you have a
With
dollar? Do you have a dollar view, Dana?
what's that?
Do you have a dollar view?
dollar has also been, I mean, it's been going back years,
Yeah.
basically hasn't gone anywhere. I would say right now we have maybe some reasons to expect at least a short-term bounce. We've got that
Okay.
testing that along uptrend, some Fibonacci support. We did move above that 50-day. If we can hold it, I think we can bounce up to maybe the middle of the range again. I
Okay.
am long right now, not for a longer term. Obviously, there's no reason from a trend perspective would necessarily be long, but I think maybe get a mean reversion.
Well, some guys say if you go back to 2022, from the highs of 115 to 101 was 14, and then from 110, uh, 14 would be 96. So
Yep.
anyway, we're there.
Yep.
Yeah, Dana has a letter for traders as well. You want to show your website and maybe what you would offer people that came to you today?
Yeah,
That
sure. Let me pop it up. But
Could be the year for the Bears.
the Chicago Bears.
Yeah,
That
see,
I've been burnt too many times on that, Dale.
they sure
Cubs
look
and
good.
Bears.
They look great
We
during.
know here in Chicago. You're looking at Chicago. I know you used to live here, right?
Yeah,
Between the
yeah,
towers.
yeah, yeah.
Yeah.
Oh, right to the left. That's my
Yep.
I had an apartment there when I went back to trade.
If you've been in Chicago for any amount of time, you know not to count
Get
your
your hopes
chickens.
up.
So, yeah.
All right.
So I was born. My first year of being a huge Chicago fan was 1984, the Chicago Cubs,
Okay.
and Ryan
Okay.
Sandberg was my favorite player.
Yeah.
And I was about in fourth grade, fifth grade that year, and got my heart broken in the playoffs. But I thought, oh
Yeah.
well, we'll be back every year, and that proved very hurtful because
Yeah.
that wasn't the case. And rest in
That's
peace,
that's
Ryan
what makes us
Sandberg. But
tough.
yeah,
That's what makes Chicagoans tough, that they could live through adversity
I guess so.
and be a
Had it,
trader
had enough
from
of it for sure. But
their
uh,
training of uh, being disappointed by their sports
yeah,
teams. But
we so obviously our main business, we have a registered investment advisory where we manage client money on a discretionary basis. But we do have this offshoot called the Lion's Share, where basically I tell you every day basically what we're looking at, what our models are saying, what trades we're looking to make, and then if we make trades, we'll post that. We'll send out notifications of the trade. So the traders that like to do it themselves, pull the levers themselves, this is a good product. We do have a 30% off sale right now, which is makes it a pretty good time if you would like to sign up. But a little bit more about us and me, you can find on this website. It's lionsharepro.com. So I
yeah,
would recommend if you're looking for, maybe a supplement to whatever criteria, whatever factors guide your trading. This is, like Dale said, a quantitative, objective,
yeah,
model-based approach that we have and that we've been using for many, many decades that has served us well. And it might be a good augmentation to whatever your listeners, your traders are
yeah,
using.
yeah. Keep an open mind. It'll keep your account open. And I look around and see ideas. They don't all, there's no such thing as an original idea. It's all out there. So, Dana's been with me and doing interviews for many years, and the reason is when he comes here, um, he provides great content and excellent directional advice based on his model. So, I endorse the pro part of the Lions report because Dana is a pro. And I appreciate you being here and putting in the effort so we could hear you today, bro. Appreciate it.
No, you got it. Thanks for having me on. My apologies for the technical issues at the beginning. Sometimes that happens. That's not my area of expertise. But
That's not my,
fortunately, I do know markets like you mentioned, and
you do.
always pleasure being on your show, Dale.
I thank you, Dana. I look forward to talking to you again, probably being around November, so we'll talk turkey then.
Sounds good. And
All right.
hopefully the Bears haven't been eliminated by then yet.
They're going to playoffs minimum, Dana.
Okay.
That's my call. I'm
All
going to
right. I
call
love it.
Vegas after I get off the
I
interview
love
with
it.
you. All
All right.
right, so Dana Lyons, everyone, follow him on X. People are asking, is your handle still the same
Yep.
at J Lyons Fund Management?
Yep.
Okay, so that's where you could find Dana. Find him, follow him, check out his work. It's good stuff. And remember, most of all, don't just count your pips, count your blessings, everybody. We'll be here tomorrow for well, I guess the Paul speech will be after Face is over, but tomorrow's the day. We'll see what happens, everyone. Remember, control your risk, and it's okay not to trade before the speech and react to it rather than predict it. So that's a wrap. See everyone tomorrow. You're welcome. People are thanking you, Dana, and I'll see everyone for TGIF tomorrow. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.